our DMD Finance, other DMDs, other respected officials to the conference. We appreciate your presence here at the conference today. We will now begin this media briefing. To do the honors, I request our Chairman CS Setty sir to address the media and shed light on the bank's financial performance for Q3 of FY25. Over to you, sir.
Good afternoon. Here.
Audio.
So, good afternoon, ladies and gentlemen. Thank you for taking the time to join this press meet today. Post announcement of Q3FY25 results of the bank. The results for the third quarter of FY25 highlight continuity, consistency, and SBI's significant long-term strengths. At the outset, I would like to thank all our stakeholders for their support and helping us in creating sustainable value not only for the bank but also for the economy as a whole. Over the years, SBI has remained focused on strengthening the key components that contribute to the sustainable value. I'll first start with a brief description of the present global and domestic economic scenario and then discuss bank's performance. In 2025, global economy is being driven by a strong US economy, offsetting the weak euro area and China. As per the latest assessment, the IMF projects global growth at 3.3% both in 2025 and 2026, below the historical average of 3.7%. The global inflation has continued to soften and is expected to approach inflation targets for most of the central banks, albeit with a different speed across geographies. However, on the downside, the impact of trade wars on global growth and in turn on inflation remains uncertain at this stage. While the new US administration's tariff decision is so far confined to North America and to some extent on China, the impression of full-scale tariff across all countries has so far not materialized. At the domestic level, India's economic growth is poised to rebound as domestic demand regains strength post the budget announcements, even as global uncertainties remain. CPI inflation has also eased to a 4-month low of 5.2% in December 2024 and will continue to decline as per forecast. As per the latest data, bank credit grew year-on-year by 11.5% and deposits by 10.8%. Coming to SBI, the results for the third quarter for FY25 demonstrate the bank's ability to operate profitably at scale due to our substantial long-term strengths. These advantages stem from our institutionalized framework, which is guided by structured processes and a commitment to fairness for all stakeholders. The net profit for the quarter was 16,891 crores, up by 84.32% year-on-year. At the end of Q3 FY25, our whole bank credit growth was 13.49% year-on-year, with domestic credit growth at 14.06%. Deposit growth was 9.81% year-on-year, while the CD ratio domestic was 68.94%. Importantly, we maintained our stellar asset quality with a slippage ratio of 0.39%, retail personal slippage ratio at 0.32%, credit cost at 0.24%, and PCR continues to be robust at 75% almost. So in terms of the business growth, at the end of Q3 FY25, deposits have crossed 52 trillion with more than 51 crore customers. I think we take pride in serving the range of customers. Our bank serves 1 out of every 3 Indians, and in some way we see that SBI touches every Indian family. The total deposits have grown by 9.81% year-on-year to 52.29 trillion. Term deposits have grown by 13.47% year-on-year. Our current account deposits have grown by 14.22% year-on-year, and CASA deposits have grown by 4.46%. I'm glad to share that the credit growth continues to be robust across all segments, with all the major segments registering double-digit growth. Our domestic advances have grown by 14% year on year, driven by 18% growth in SME, 15% in agriculture, 15% in corporate, and 12% in retail personal segments. Our foreign offices advances have grown by 10.35% year on year. The domestic credit deposit ratio was at a healthy 69% at the end of Q3 FY25, indicating sufficient headroom to address future growth requirements of the economy. The bank continues to demonstrate industry-leading asset quality at this scale. The slippage ratio for Q3 FY25 was 0.39%, while the credit cost for Q3 FY25 stood at 0.24%. The net NPA ratio improved by 11 basis points and stands at 0.53%. We have a well-provided NPA book with PCR of 74.66%. The asset quality of the bank has continued to remain strong over the last 5 years, which demonstrates the quality of our loan portfolio, the robustness of our underwriting processes, and the leadership of the bank across business lines. Our capital adequacy ratio is at 13.03% without considering the plowback of profits and is well above the regulatory requirement. If we include the profits for 9 months FY25, our CAR would be at 14.5%, while the CET1 ratio will be 10.99%. Based on the current profitability and growth profile of the bank, we believe we have sufficient headroom to take care of business growth requirements. I'm happy to share the progress we are making in the digital banking. More than 8.45 crore customers have been registered on YONO, which is pushing forward the digital agenda of the bank. 64% of our regular savings bank accounts were opened through YONO in Q3 FY25. And as far as subsidiaries is concerned, are consistently performing well and continue to create significant value for all the stakeholders. We will continue to nurture these subsidiaries and maintain leadership position in the respective businesses. We are glad to report that the bank continues to report ROA and ROE greater than 1% and 20% respectively at the end of 9 months in the FY25. While we are glad about the outcomes in Q3 FY25, we are also mindful of areas of further improvement. On the liability side, we continue to focus on increasing our share in current account while maintaining our leadership position in savings bank deposits by further strengthening our customer outreach and branch expansion. Although the bank's cost base is substantial, it highlights our commitment to compliance and establishment expenses. From this strong position, our goal is to consistently achieve ROE over 15% through the business cycles. Wrapping up my initial comments, I express my gratitude for your ongoing support to the bank. As the bank advances its objectives, it also plays a role in driving the progress and economic development of the ecosystem. We are dedicated to upholding your confidence in us by delivering superior, sustainable returns over the long run. My team and I are now open to taking your questions. Thank you very much.
Thank you very much, sir. We will now move on to media question and answers. To ensure a smooth flow, questions we will take, and we will announce the name from here for the respective person, and then we request you to follow that procedure, please. So may we request Setty from Reuters, please, to take the first question.
Audio.
Okay, hi. So my first question is on your margins. Last time when we spoke, you said that it is going to stabilize soon. Just wanted to get an outlook on that front. When are you seeing some stability in margins? Any timeline on NIMs? Post that, I'll come to my next question.
The NIMs broadly are holding up. I think there is a general shift from the CASA to the fixed deposits. And if you see, the cost of deposits are mainly because the shift is happening from the savings account to the fixed deposit. While we are holding up on to the yield and advances, I think it is more or less, if you see here, we have broadly held on to the yield and advances. It's only the cost of deposits which are, we feel that the cost of deposits have stabilized and they've peaked. and hopefully the margins will remain here. And earlier guidance also we said that there would be 5 to 6% margin compression, and I think broadly we are holding on to the quarter on quarter. Year on year, of course, there have been developments in terms of shift in deposits, and most of the depositors we also are seeing that locking into the long term. So which means that the costs have gone up on that front. But I believe that the rates have peaked on the deposits.
So my second question is on your corporate loan growth. It's at 14.86 year on year. Wanted to first get an outlook on where you're seeing corporate loan growth, where do you expect to close FY25? And my second question related to that is what's your corporate loan book pipeline? How does that look like at this moment?
So I'll give the guidance on credit, and then I'll ask Ashwini to respond on the pipeline. We still are sticking to our overall credit growth of 14 to 16%. And I think it's been consistently we are giving this guidance. And based on what we have visibility on the corporate loan pipeline, as well as in terms of what we see in the month of January in the retail, our home loan, we are confident that we will be sticking to that guidance of 14 to 16%. You want to say on that?
So the pipeline continues to be strong. We have a sanctioned but not disbursed pipeline of almost 2,22,000 crores, and a process which is in process but not sanctioned 261. So roughly 4,83,000 crores of pipeline.
We will take the next question from Joel Rebello of Economic Times.
Sir, my question is on if you look at it, your personal loans, which is other than home loans, was the fastest growing segment maybe about a year ago. Now among the three which you have put here, it is the slowest one. So just an outlook on that piece of your loan business. How are you all seeing it? Did you all see a slowdown this quarter? And what's the outlook on that? I have another question, but...
So if you see on the... You're able to hear me? Okay. So the retail personal loans as a category, comprises of home loans, auto loans, unsecured personal loan, what we call express credit, and gold loans, and loans against fixed deposits. This cohort is growing, is around 11%, but the biggest product category is here is the home loans. We have recorded almost 14% growth rate in the home loans, and with a excellent asset quality in home loan category. And we also have seen a significant growth in the personal gold loans and pension loans. What has not grown the way it was growing is the express credit, which is unsecured personal loan. Last quarter also we mentioned that we are making some systemic improvements in terms of our delivery of this unsecured personal loan. We wanted to make this journey completely digital. While it is also a fact that in the systemic level the unsecured personal loans are coming, and we are not an exception on that. But our portfolio is of a different category. We normally give to the salary class who maintain salary accounts with us. And to answer your question in terms of coming back, I think we are seeing that the unsecured personal loan in our portfolio is showing good growth in the current quarter, which means that whatever we have had a lower growth rate in the last 3 quarters, we're able to reverse that now. And hopefully, I think we may not have that 30 to 35% CAGR in the unsecured personal loan, but definitely we'll come to the double digit in there.
My second question is on asset quality. Across the sector this quarter, we have seen that there has been a spike in unsecured loans. Microfinance has been a pain point for everyone, NBFCs as well as banks. What is your sense on the asset quality for your bank, in the sense, again, on the personal side? Because I think corporate loan books are still pretty, the other side of the cycle. So what's your sense on the personal side?
You're right. I think corporate book is holding up very well. That is also because many of the corporates are deleveraged, and they're in a much better position. And also we have strengthened our corporate underwriting. I think you should give some credit to us on that. But in the RAM segment, SME is doing very well, and agriculture is holding up in asset quality. Retail personal, in the microfinance, we are not very significant player on the direct lending. And even lending to MFIs also, our portfolio is limited. We have about 10,000 or 11,000 crores. We have not seen any major movement there in the MFI lending. Our own portfolio of MFI is very small. So, having said that, we do see some stress on the microfinance in the industry, and I hope that the refresh, 15-day refresh in the credit information company data will help lenders to underwrite in a better manner. I think that will be addressed going forward, I believe.
Next question we have from Sangeeta Mehta of Economic Times. Sir.
I just wanted to add sequentially, actually, in all the segments, we have the NPS have gone down. Individually, agriculture, retail, personal segment, SME, corporate, you name it, we are all down quarter on quarter. So that's a very positive thing about the results.
No, microfinance, no. Let me just explain.
Yes.
So, Sir S. Sir mentioned our book out to direct microfinance lenders is small, 10,000, 12,000. There we have seen their NPS go up a little. There's no question on that. But these are the best run MFIs, the best in the industry, the top 3, 4 you can call them. So therefore, we don't have any concern that they would start to show any concerns to us. And they have assured us by our conversation that they are on top of things.
Sir, this phenomenal growth of 84%, could you kind of, is this going to be the run rate, or could you throw some light on what led to this kind of a jump in profit? And also, could you also share something on stress loans? It's fallen, so was there some one-time recovery, or did you all write off the loans? Could you share something on that? I have one more question.
First thing is on, in terms of the percentage jump in 84% cannot be possible, but I think what we wanted to maintain is in terms of the consistency and continuity in terms of the ROA and ROE. I think that is more important indicators than the absolute profit numbers, and our guidance on the ROA of 1% and ROE of 20%, 15% and above continue to be valid. I think we will work on that count. As far as the year-on-year movement, I think we also had one-time expense in Q3 FY24. That is not there, so that is showing the spike. While we have improved on every parameter, the substantial jump in profit is also because I think there was one-time exceptional item in Q3 FY24. The second question you asked in regard to?
Your stress loans have come down,
Yeah,
gross NPA net.
there is no substantial,
Yeah,
there is no major recovery or
account
no major write-off. It is our usual run rate in terms of strengthening our recoveries has helped us. These are all small value recoveries, and we maintain that run rate.
So, assuming RBI reduces rates tomorrow, what is the kind of headroom or flexibility you will have to lower your deposit rates, and to what extent you think it will contract or impact your NIMs?
No, as far as
I'm assuming 25 basis points, so basis that.
No, as far as the rate cut impact is concerned, on the deposits, of course, we will take a call as we go forward through the ALCO. But the impact on loans and all, if it is a small rate cut of 25 basis point, I don't think there will be any significant impact on our earnings. I think our book, as you know, is significantly MCLR and fixed rate loans, and we have a combination of 60-40 as far as MCLR fixed rate to a floating rate, repo and T-bill. So, and the T-bill rate also we were able to negotiate, even T-bill is going down, we were able to negotiate or renegotiate the margin over that. So, we don't see major impact of the rate cut in terms of the deposits or advances in the immediate future, because the deposits also will take some time to get repriced. So, and as far as deposit repricing is concerned, we'll take a call as we go forward. EBLR is
28.84.
28%.
28.84. Yeah.
29. The EBLR is SME loans are also.
SME and housing.
loans are.
We have the next question from Hamsini of Money Control.
Hi. Before I ask my question, I just want a clarification on EBLR. SME products will have an overlap between fixed rates and EBLR also depending on the risk and category?
No. SME
Fully
is mandatory EBLR.
Okay. I have two questions, sir. I'll go with my first one. Your cost of deposits is now at around 5.05, and you're talking about further strengthening your deposit base as well. Do you foresee a situation where, and last year around July or so, you came up with special deposit schemes which conclude in March. Do you foresee a situation where, like most of your competition is, possibly have to give out a little more on deposits in order to fortify your position there, in order to ensure that you remain the market leader in that front as well? And what would if you, especially in a market where we're expecting that the rates will go down, would we be comfortable with such a strategy?
No, we always held, earlier also I mentioned, for us deposit mobilization is a franchise activity, right? We always try to compensate our customers adequately, and we have a very loyal customer base, and obviously they need to be taken care of. But if any policy rate cuts are there, to affect the policy transmission, probably we may have to look at repricing the deposits. And as far as deposit mobilization is concerned, I earlier also mentioned we would like to compete on our service quality and the reach, and giving some additional benefits to the customers in terms of privileges, what is permitted regulatorily, than competing on the price.
Okay.
Yeah.
My other question. My next question is with respect to one of your subsidiaries, SBI General Insurance. Now the 100% FDI is permitted there. Most of your SBI holds a little over 64. Rest is largely funds held. Are you in conversation with any foreign investor there to offload some stake? And also listing, you were earlier guiding for a listing in FY26. We're approaching that. Is that also in the anvil?
We are not having any conversation with anyone, no. And the second thing is that the roadmap is essentially to look at, what is essentially the in our stable of subsidiaries. We earlier also I mentioned, if we have to really go to the market, there are two subsidiaries, SBI Mutual Fund and SBI General. And we also have said that we will wait for them to achieve the what is called the critical mass, particularly in the SBI General business, and we'll take the call in terms of lending, in terms of listing at that time. And the mutual fund, we haven't had any discussion on listing yet. We will let you know when we take a call.
So if at all there is a capital requirement, you would be banking on Yes Bank or going to equities?
All options are open. All options are open. We have the advantage is that we have several options.
Good.
Right.
We'll take the next question from Shipra of Informist.
Hi sir, Shukra from Informist here. Just a couple of questions. On the SMA 1 and 2, we're seeing a rise in SMA 2 book, so if you can throw some light on that.
No, that's only temporary. There was one major account which was classified as SMA 2 on 31st December, and that has been regularized. So we don't see, if you take away that account, I think this is just about 3,700, which is the run rate of SMA 2s generally. There's no concern on that. Yeah.
And so another question on slippages. The corporate slippages have also inched up on, I think, on sequential basis. So what is the guidance on that front, and also how do you see the segment panning out?
No, corporate book is holding up very well. I think we don't see any concerns in terms of the asset quality on the corporate book.
So any fundraising plan? for the next financial year? Or?
The fundraising is always on our horizon. It's only the timing is something what we look at.
Next question is from Gopika of Mint.
So the operating profit has been weak. I think this is largely because of the treasury and the forex income. So could you guide, I mean, how are you seeing the outlook on that?
So I think the market movement, the change of administration in the US, everything had contributed to the market movement. And but one thing what we, if you notice, our trading gains were there. I mean, it's only the MTM which has impacted us. Because most of the portfolio also is on the fair value to P&L, FVTPL, HFT, what they call. So that movement will impact on the MTM side. But otherwise, we will continue to have this trading gains to the extent possible. And earlier also I mentioned that the treasury gains are something which we don't rely upon. We want to build the core income growth. And operating income, if you just consider ex treasury income, I think is holding up very well, and we will continue to focus on increasing the yield and advances and also containing the costs on the deposits.
Thank you.
We'll take the next question from.
Yeah.
Some of these mark-to-market losses are also on account of the swaps what we do to support our, to provide funding support to our foreign operations. So they're all integral to our business as such. And in fact, this quarter we have seen a kind of recouping of some of it, some of the mark-to-market. So they are not translated losses as such. They are more like a mark-to-market, and we are confident of improved position. Of course, subject to market forces.
Next question is from Piyush of Hindu Business Line.
Good afternoon, sir. So just one clarity. You said 60-40 is the mix, ma'am, on your loan book. So 60 would be the floating?
No, 40 is floating.
40 is floating and the rest is fixed?
Either MCLR or fixed.
Okay. Sir, I wanted to ask you on this, your credit cost slightly inched up by 3 basis points on a year-on-year basis. What would be your guidance going ahead in terms of macro also, because you're the largest lender?
So our, I think our consistent guidance on the credit cost is 50 basis points. And that I think still holds good. And 3 basis point movement on a 40 lakh crore loan book, I think you have to give some allowance to us. But this is again, our efforts are in terms of even ensuring that how do we maintain this, and we are hopeful that the quality will be maintained. At the system level, there are other challenges in terms of microfinance. Other than that microfinance, I don't think the book, even in the system level, whether you take home loans, whether you take corporate credit, SME, those books are doing very well. So I don't think the concern on the system level, other than the microfinance, is there.
So the 10-12,000 crore exposure that you have to MFI companies, any of them, a couple of large ones, there have been reports that they're struggling to repay lenders. Are any of your such exposures in any stress category right now?
No.
And so finally on loan and deposit, because we are in the last quarter, so for the current year, the guidance, will it continue the next year? That's all.
Yeah. I think let us pass this, but I think for the current quarter, as I mentioned, we still hold that guidance, 14 to 16% credit, and hopefully the 10% growth rate which we registered will continue in the deposits.
Next question we have from Ashish of PTI.
So the sort of pickup in unsecured lending, retail lending, will it help your retail personal loan asset growth go at par or faster than the overall bank growth? And how long has it been? Have there been any precedences where the overall retail growth has lagged the overall bank growth in the recent past? I don't know. It's a data question.
In the recent past, may not be. I think I think we took almost a decade to flip this ratio where retail RAM. I think you need to look at RAM as a whole. It's not about retail personal. But as I mentioned earlier, also I think our retail personal has several product range. It's not about one product dependent. And we have done fairly well in gold loans, for instance, and we were not there in gold loans earlier. And we are the market leaders in auto loans. And today, home loans category, I think we have done extremely well, about 14%. So our ability to manage to grow in the retail personal, but it is important to, as I mentioned, I think unsecured personal portfolio of Express Credit is the largest segment other than home loans in the retail personal segment. So that we'll have to come back to double-digit growth to achieve that retail personal run rate what we have had in the past. We are hopeful. I think if not in this quarter, next quarter definitely will be there.
So you also mentioned that ROA will be the focus areas and not the absolute
Yes.
profit number. There was some commentary in the past about an aspiration to have a $1 trillion net profit. 1 trillion rupee.
Rupees. I wish that it dollars.
Yeah. How do we look at that aspiration in the context of the new comments?
No, that aspiration is always there. That is a fairly simplified aspiration. Of course, there are so many other elements which go into it. I think the number is very attractive and aspirational, but it's not. When I mentioned that it's not only the profit, we need to look at the profitability of operation, and especially when you are operating at scale, the profit numbers will always be significant. But we don't want to move away from our focus on the profitability. This is a limited point what I wanted to make. I still want to make 1 lakh crore profit. So no deviation from that. Yes.
Next question we have from Abhijit of Business Standard.
Good afternoon. You spoke about that you would like to increase the yield on advances and control the cost on deposits. When it comes to yield on advances, would this increase in the unsecured loan growth, would that improve because the yield suddenly jumped there? That's one. Second is with regard to the MCLR book. How much is, as a part of the total, how much is the MCLR, and do you see further room for passing on that to the customers? Because these are the two levers perhaps where you look at.
The first lever, of course, we still have, I think, 50 basis point on the MCLR, 35 basis point in MCLR, but I think the passing on that cost to the MCLR structuring will depend on the competitive environment. But we will definitely look at what is that we need to do. But more importantly, our portfolio of MCLR is so around 32% is MCLR, and as we mentioned, more than 25% is a fixed rate, mainly the personal loans. You're right. I think some yield pickup will definitely come from the growth in the unsecured personal loans, because that is the largest income generating portfolio in terms of the return on assets. So that is one area. The other area is that yield on advances, we would like to see that wherever possible, in terms of corporate loans also, we would like to use our negotiating power to bring a little more to the table. That is the effort which is going on, and we do not want to really play on the RWS. If you see, I think we have continuously maintained the healthy RWS. So it's a play on risk as well as pricing.
Second is between Q2 and Q3, the global changes they have added to the volatility. How really it has a implication for your outlook for your international book growth? Because it's grown at 10%, but given the prospects of increasing volatility only, is there any kind of a rethink? So
I think our international book is very balanced portfolio, and if you see 30% is ECBs and 30% or 35% will be trade finance, which is again India related, and global supply chain, and rest is local lending. Local lending, we will definitely look at how the geopolitical environment is playing out. As I mentioned right in the beginning, our international operations, particularly on the credit side, is focused on margins. If the margins are not available, we'll just pare down our balance sheet. And it is also many a time is relationship oriented. You know, we have a relationship back home, and we want to provide some dollar liquidity to the corporates. They generally will take a call. So it is not only a geopolitical environment, our own approach towards lending in the international operation will determine. You want to say anything, Ram?
Yeah, to just supplement what sir has said, our IB international banking group play has always been a calibrated play because it supplements very well with the domestic. So we look for an opportunities, of course, subject to the opportunities for growth in the foreign locations as well. So it will be a more like a calibrated play.
And my last question is about, you spoke about that is we will look at a critical mass for these two subsidiaries before you think of listing. Your mutual fund is one of the largest. So what is your still definition of a critical mass for you to take a call?
No, the critical mass is not only market related, our own assessment of critical mass. So, yeah, we will come when it comes to it, we'll, convey to you.
Yeah. Next question we have from Hitesh Vyas of Indian Express.
Sir, I just want to ask about private capex. How are you seeing it? Are you seeing some signs of pickup?
Private capex is definitely happening, as Mr. Tiwari mentioned, in terms of pipeline which is available. Gives some glimpse about where the capex is happening, and it is happening across the sectors. But I think private capital expenditure in the core sector, particularly in the steel, is yet to pick up. I think this is also something I mentioned earlier. People also are looking at the global play out, how it is going to work, this tariff regime, but our view is that the budgetary propositions in terms of spurring the demand domestically, consumption demand particularly, should make many of these industries which are not currently undertaking capital expenditure, despite reaching 70-75% capacity utilization, would definitely rethink on that and will come to the market.
So budget has announced some rationalization on personal income tax and TDS on FD, sir. So what amount of this money can come into the banking system in terms of deposits?
So there definitely be increase in the disposable income. Obviously, this whatever they are going to save on the tax, reduced taxation. Our assumption is that partly will go to consumption, partly will come to the banks, and partly will go to the investments. And that depends on which segment is actually is investing or looking at this. There is definitely positive development for the banking system in terms of the deposits. It is difficult to put the figure right away, but there is a large number of this category of customers in our portfolio, this 12 lakh taxation bracket, income bracket. The second thing is that senior citizens, particularly TDS being reduced for them, is a very positive thing. And in the overall banking sector, 20% of the deposits come from this segment. So if many of them may also do not put all the money in their bank because the TDS hassles are there, but that has been taken out. I think that's very positive development. So combination of this should help us to mobilize more deposits.
Next question is from Sachin Kumar of Financial Express.
Sir, I wanted to understand your way forward in terms of deposit growth, and the advances growth is around 14% and deposits is around 10%. So going forward, do you expect this gap to remain at the same level, or you want to narrow it? And also, are you finding it difficult in terms of mobilizing deposits right now compared to a year before?
If it is not about a year before, but obviously the rate of deposit acquisition which was there during COVID is not going to be repeated, right? We have had the best deposit growth rates during COVID period, so that is unlikely to happen. But we are not concerned in terms of the gap either widening or narrowing, because as we keep saying that we have adequate liquidity in our balance sheet. Our CD ratio is not very high. We still have room to grow there, and even if 10%, and we have excess SLR position, that means whatever deposits we mobilize, the preemptions are limited there. That means our ability to lend and the deposit mobilization is higher than many of the players in the market. So this 10% deposit growth rate is very comfortable. Even if it is 8 to 8.5% also is comfortable. But I think somebody has mentioned that we would like to maintain the market share also. Obviously, our deposit mobilization is not only towards funding the credit growth, it is also to maintain our franchise and the market share. So I don't see there is any concern in terms of this gap widening.
Next question we have from Lalitendu Mishra of The Hindu.
Sir, you spoke about the tariff war and its likely impact in uncertainties looming large. The tariff action has been paused for the moment, but there's no certainty that it will not happen. So what is the impact? There are a lot of people will be borrowing money from you for exports. So what could be the impact in case the tariff war escalates or India comes under the cloud? Thank you.
We'll have to see. I think there could be some positive side also to it, depending on which country is going to face the tariffs. But if you see, the export base of India is highly diversified, both in terms of geographies and also in terms of the product profile. So I don't see immediate impact of any of tariffs, and I'm told that our exports to US also is not so high to be worried about. But the general environment creates some uncertainty, and this is something what we have to tide over.
Thank you.
Next question we have from Mr. Benichin of the New Indian Express.
Hi sir. Moving away from the earnings, is the BSNL account fully provided for, and any development on that account?
As a policy, we don't talk about individual accounts.
Okay.
Next question we have from Saikat Das of Bloomberg.
Hi sir. I have two questions. First question is that how are you currently engaging for oil payments, oil-related payments? Is there any review?
No, as far as whether it's oil-related or any other commodity-related, our stand always has been that we abide by the whatever because we have a significant overseas operations, and if any sanction requirements are to be abide by, we will abide by that.
Any current review in view of the current escalation in some parts of the world?
Nothing has come to our notice.
And my second question is, how do you assess the prospect of green financing in India going forward?
Oh, that requires a separate seminar altogether. Yeah. But I would give some flavor in terms of what we are doing in terms of green financing. Green financing for us, both in terms of scope 1 and 2 internally, and scope 3 with our customers, we are fully engaged. We are the first bank. I think there is a presentation. In the presentation, you can see a few slides in our commitment to decarbonization commitment of the country. And we are aligning our own goals of decarbonization and greening the economy with the country's goals. And as far as our own internal policy of decarbonization and emission reduction of SBI, we want to become net zero by 2055, which is the centenary year of State Bank of India in the new avatar. That is our internal commitment. As far as scope 3 emissions is concerned, we are engaged with all our customers in terms of moving and how do we handle the transition. And we'll have to see with a new regime what is emerging, how this ESG is going to play out. But the country's goals and our goals are fully aligned.
Thank you.
Yeah. Next question we have from Preeti Singh of Bloomberg.
Hi sir. So you spoke about how the deposit growth is slower, CASA has gone down. Do you think we are coming to a new normal for CASA which might be below 40?
I hope not. But I think broadly, see, if you see the trend of CASA growth is tremendously moved up during COVID. We have reached as high as 45%. So we try to compare with those high ratios and say that the CASA is under pressure. Obviously, there is a shift in the saving behavior, which is irreversible in my view. There will be some movement from investment to savings, but broadly I think the culture of investment and looking towards generating some good return on our savings is here to stay. And also the element of government managing its own cash flows is impacting the current account movement. So I don't want to call it new normal, but I think higher CASAs seem to be difficult.
Okay. The other one was in terms of the recent budget. We are hearing about. I wanted to check if you want to revise anything in terms of your credit outlook, because everybody is talking about more investments, more lending opportunity. How are you seeing it for SBI?
There would definitely be positives, particularly on the SME and agriculture. We are already growing well, and I'm sure these budget proposals would help us, further grow in these segments. And hopefully the demand consumption movement also would help corporate to grow. But we still want to stick to our 14 to 16% credit outlook.
Thank you.
We'll take the next question from Falak Naz of Asian Age.
Sir, could you share the international slippages from the international book? What are the slippages and the margins sequentially? Have they worsened or have they what they are? And also, second question is on the recovery from the write-off accounts and recovery from the NPA sequentially. If you could share that also. Thank you.
You want to say something?
I think we did not experience any major slippages at all in IBG book during the current quarter. In fact, that also is indicated by a very good NPA, GNPA ratio. So asset quality wise, we don't have any concerns. What's your other question?
NPAs from recovery and NPAs from the written off accounts.
Cash recovery or NPA we had for the 9-month period is 4,863 crores, and for the OCA it is 2,200 crores.
This outlook continues to be on that level, the quarterly run rate.
Next question we have from Manojit Saha of Business Standard.
The exceptional item last year was 7,100 crore. If you net it off, the profit growth is almost like that. So profit growth is essentially flat, 10% or 12%. But what exactly was the exceptional item last year?
No, when the pension rate was increased from 40% to 50%, we took one time, but I don't agree that it's flat profit, because some of those costs are carried even now, right? As a run rate. So if you consider that, I think even after adjusting that 7,100, there's a growth.
And net interest income is also flat, one can understand that.
Yes.
But why there is a drop in non-interest income? Is it because of the MTM?
Treasury, yeah, we told that is a.
What is the amount?
Yes.
What is the amount?
Amount is about 1,900 is on account of MTM.
MTM.
Yes.
But
and 1,900 was there in the Q2, and 1,500 that was positive MTM, and 1,500 negative MTM this. So in a combination of that, resulting in the lowering of operating income sequentially.
So 1,500 crore.
Yes.
But you also said there was a trading profit, that is profit on sale of investment, right?
Yes.
What was the amount?
Yeah, you can. Right.
So in the P&L on sale of investments, there last quarter we had 4,641 crores. This quarter it's only 1,194 crores. And secondly, forex income, which was 1,111 crores, is right now 48 crores. So this is the difference. Sequentially it has gone.
But we'll give you the numbers separately.
It's there in the book also.
Yeah.
Okay. Also, basically on the margins, because now there is a rate cut. So do you think margins will fall below 3% because your 30% is EBLR, so that will immediately come down? So is that the scenario you are looking at? Because there could be 2 rate cuts. So going ahead, below 3% margin, is that a scenario you are looking at?
So some of these rate cuts will also reflect in the deposit cost, right? So to that extent, I think we are hopeful that we'll maintain the NIM at 3%.
At 3%.
Request you to please stick to 2 questions. We have others and time is running short. Request you for that, please.
We can take the questions offline.
We can take offline.
Yeah.
Thank you. Thank you very much.
We'll take the last question from Alek of ET Prime. Thank you so much.
Hi sir, the December edition of RBI's FSR spoke about stacking up of borrowers opting multiple loans.
Where are you?
Yeah. I just wanted to know what would be the number approximately for SBI in terms of say a credit score based prime borrowers opting more, or is that?
No, sorry, I missed your question. Can you repeat?
The FSR, RBI's FSR spoke about so borrowers opting multiple loans. Wanted to know what would be the number for SBI given you have such a large.
We are not there. We are not there in that segment at all.
And sir, on the risk weights, given the high correlation between credit growth and GDP, NBFC's credit growth have sort of taken off. Do you think there's a case for at least giving some leeway in terms of risk weights on bank lending to NBFCs?
At this juncture, probably they may not really look at it, but the overall, if nominal GDP is at 10% and with all the budgetary estimates, budgetary propositions, the usual, the contribution of credit would be 10% plus 4 to 5%. And if we are growing at 14 to 15%, I don't think there is any special dispensation required.
Okay, thank you, sir.
Thank you very much. Thank you all for joining us today. Thank you very much. Have a great evening. Thank you very much, sir. Thank you.
अरे ऊपर मत जा यार. ओवर है. काटने के लिए बोल दो, मैं इसलिए वन नहीं किया ना तो गलत लगेगा. तेरे को दे रहा हूँ. मुझे पता ही था ये काटेगा. पर रुक भाई रुक. तेरा वायर मिला ना. तेरा लास्ट में एकदम